Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. So this week actually has become the logical continuation of the previous one. In the previous week we had important statistics. It's mostly was a PPI and payrolls on the week before. So on this week we've got few major data. So first is the CPI, now retail sales, and finally consumer confidence by the end of the week on Friday. So all this stuff set the more or less clear picture, and currently it's become more clear how investors treat the overall situation in the euro currency, what is the attitude of the markets to the euro currency. The one important on all this stuff we have discussed in the weekly report again, as usual. So, in two words speaking, currently we see absolutely ignoring from the markets and the investors in the euro recent data. It means that markets treat the overall situation as a balance between the United States and the euro currency in terms of the coming change in the Fed policy. And they ignore some details. So they not treat every statistic separately, but put it in a whole picture. And the whole picture stands so that we're coming to the changing in the Fed policy. When this will happen and how this will happen, this is still a question. But definitely we're coming to it. And definitely the Fed is closer to the changing of the policy than the European Central Bank. Second moment, overall statistics from the United States is better than in the European Union. This is enough to justify the recent behavior of the investors. And currently we could say that overall sentiment on the market stands very poor. So if we'll take a look at the commitment of traders report, we already talked about it a few weeks in a row that we do not see any purchases and investing in euro assets. So we do not see the rising of the open interest in European currency. This week again, euro currency has lost approximately 40,000 contracts. This is really big amount. It's more than the 5% of the total open interest in the euro. What is interesting also is that investors were closing the positions without any changes to whether it's shorts or longs. Speculators have closed shorts or longs in an equal amount. Hedgers mostly do the same. And that was even before the retail sales data. So I think that on the next week, the overall situation will become even worse. That's what about the fundamental part. It's also a lot of other things we have discussed, in particular speaking the coming Fed, overall statistics, so a lot of other things. But in general, you could see the reflection of the ongoing processes and overall response on the market on the charts. Currently, it's become very clear that we're going lower. So actually we warned about this even in the last week, based on analysis on the intraday charts that said that it's not typical for the bullish reversal, so market should behave different. Even before this collapse has happened on intraday charts, this was some triangle that we discussed. That's what's not natural for bullish performance. Even on Thursday, when the market has appeared right at this point, theoretical chances existed here for possible action, but actually we also discussed the situation and said that is not the situation where we intend to go long. So this is bad. Overall performance here is bad. So currently it's become clear that some doubts that we have on the 1620 targets when the market suddenly reversed here before it has completed this target. So it was a bit some riddle to us. That's why this is going on before the hitting major target, how it could be and what will be with this target. Now it's becoming clear. Market is going to the 1620. That's our major destination point here. Market should reach it within coming week or maybe a bit longer, but that's the major object that should be reached. it means that at least on the daily chart, we are not considering currently any longs position. We are waiting for reaching of this area. On the dollar index, this behavior takes the shape of the free drive pattern. We already talked about this as well. So actually on the daily chart, we have nothing new. It's just become more transparent picture. It now has more clarity. That's why we're going lower. Market is not at oversold, as you can see. Trend is bearish on all time frames, which means that currently with the long positions, we are waiting at least 1620. It doesn't mean that on 1620 market shows the major reversal, but at least that might be the good background for a pullback. And since we have the strong confidence support on the weekly chart, daily oversold in the weekly OP at the 1620 is also yearly pivot point. It promised to be interesting, and at least some response should happen to this level. Since this is long-term support, response on the lower time frame chart might look like very strong upper performance. So that's what we are waiting for taking the long position. It means that currently we have no options, but just to watch for taking the short position on the daily and intraday charts. Now we have no barriers, as you can see, oversold stands ahead. So here's the relatively free space. Also take a look, the market has broken through the 618 support that we discussed. Friday performance was on spot, so we said this might be 50% pullback, and indeed has happened. Just 50% retracement based on the double repo pattern that we were discussed here. So what we're going to do right now, so we have low standing targets. First one stands at 117. It is interesting that the XOP, take a look, it agrees with the same 1620 target. So that will be the next destination point that probably should be reached. Here's definite sign of the acceleration, which means that the OP definitely will be reached. And we need to keep an eye on the possible retracement where I could consider taking the short position. Here's a few ways exist how we will treat the overall retracements. First way is until market stands above the OP, until it hasn't reached it. Retracement should be minor. So take a look at our chart. You could see that every time market shows really very harmonic retracement. But sometimes it shows two swings, sometimes it shows one swing. So you can see that even on the COP touching, it was one swing retracement, 50% approximately. And market collapsed. On every retracement, market was stand inside the previous downside swing. So it never exceeds the previous swing. So it means in the current situation, we're interesting with the levels, that stands only inside of this most recent swing. As on the COP retracement was very small, it means that until market will not reach the OP, any retracement also will be very small. And for our purposes, it means that we will be watching only for 1750 and maybe 1765. But guys, I'm not sure that will be reached, because here, as you can see, if you use the same harmonic swing, you could see that might be somewhere around 1750, where this will be logical opportunity to go short. If we missed the entry or no retracement will be formed and market hits the OP target, in this case you need to consider a bit greater retracement. Probably two swings might be formed because the OP is important target, so and the retracement might be a bit deeper. But this is very minor tactical issues. They actually makes no impact on overall performance and our target setting. So if even you take the position on the first harmonic swing, but market will show two of them, well, the proper placing the stops above the top of the previous swing, that's what should be enough to protect your position and not be washed out by the doubling retracement if it will happen. So that's actually all that we have currently. Let's keep watching for two major subjects on next week's Fed meeting, and by the end of the week it will be the PMI report. That probably will make the week, coming week, and set the tone to the whole action through the whole week on the euro currency.